Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about stocks like TCS that will be reporting its quarterly earnings today. We'll be talking about the trade setup, and we'll also have a very special guest in the studio to talk about the outlook on gold and silver prices going forward. And if you have any stock-related queries, send them in to us on our YouTube feed, and we'll have them addressed by our expert on the show. But before we do all that, let's take a look at the top headlines at this hour. Wall Street ends mixed ahead of March inflation data and the release of FOMC minutes from the last policy meeting. Asian markets open mixed while the SGX Nifty is signaling a flat to positive start for the Indian markets. IMF cuts global growth forecast for this year to 2.8%, says the prospects for growth in the medium term look bleaker than before. Also trims India's growth forecast for FY24 to 5.9%, which is sharply lower than the 6.5% projected by the RBI. Q4 earnings season kicks off with software giant TCS set to report its numbers today. Margins likely to expand on the back of easing supply-side pressures and better utilization. All eyes on commentary on the BFSI vertical in the aftermath of the US banking crisis. And in macro data, March inflation may have eased to 5.6% on a high base and some softening in food prices, while IIP for Feb is likely to grow at around 5%. Also on the show today, stocks like IndusInd Bank and Delhivery in focus, and precious metals are shining bright amid safe haven demand. Peter Mcguire of XM Australia will be joining us in the studios to share his outlook on the same. Well, let's get in Peter then without any delay. Peter Mcguire of XM Australia is joining in. Hi, good morning, Peter. Good to have you in the studios. Tell us about your stay in India. How are you enjoying it?
Well, good morning, Nandita. I tell you what, it's a fantastic city. I'm in love with the place. I've been here many times. I've got great friends, but more importantly, the vibrancy and certainly the energy, you can't miss that. And the infrastructure, you're looking at, rail systems, highways, new roadways. It really is it's a transformation, and India's got, it's coming up the curve quickly.
Right. Well, I'm happy that you're enjoying your stay. Well, let's get on the subject then. Gold has been shining bright ever since the US banking turmoil broke out. We saw the yellow metal go above that $2,000 mark amid safe haven demand. Now, IMF has also given a warning that, this US banking crisis poses some serious risks to global growth, right? So do you think gold is headed higher towards that $2,100 per dollar mark? Isn't it getting too expensive to actually get into gold right now?
Well, I tell you what, I think there's been a big push as far as retail demand, and certainly for the precious metal itself, not the paper market, but the actual buying of physical gold, and it's been very strong, and silver, don't forget. So that overall picture, I think, is going to increase as far as demand over the rest of this year and certainly into 24. There's a lot of global uncertainty, and the appetite across young people and certainly all ages, but are really attracted to the yellow metal, and I think that's best years are ahead of it.
Right. Peter, if the FOMC minutes are going to be released tonight, and, if the Fed signals that the next 25 basis point rate hike would be the last one, then, where do you expect gold to head then around this year, later this year?
Well, I still believe that there'll be stronger demand because quite simply, there's a lot of uncertainty moving forward as far as, yes, the inflation story, but is it really going to be under control with food prices and energy prices? And it seems to be a flight to a little bit of safety. And you're looking at the dollar, you're looking at the currencies being very volatile. The overall picture, I think, is going to be stronger for gold and stronger for silver. So there's been underinvestment in silver, and I really think that, again, it's got some good times ahead of it.
Are we looking at $30 on silver anytime soon?
Yeah, look, it's been there before, and I think it's got plenty of upside yet. I think it's still ridiculously cheap. And once it rises and once it goes on a big rally, it's had a good rally anyway from 18 to 25 bucks. But I think it's got a lot further to run. And yeah, 30s are very achievable. Right,
30 is achievable. Let's also talk about steel. We had China inflation data coming out yesterday. It's at 18-month lows. And, the demand from China when it comes to steel hasn't really picked up. So in that sense, where do you expect steel prices to head now?
Well, steel's interesting because you've had such a big build as far as the building industry and construction industry for really decades in China. And we've still got issues there as far as the property sector. So maybe it's at a point in time that there just hasn't been strong demand externally as far as globally for steel. You only got to look at, I'm sure there's plenty of steel demand in Mumbai, but when you're looking at China, there's a position there that I would say it's probably take a few more months and still until things really start to ratchet back up. We're post-COVID now, and probably it's a bit early to call. So, yeah, don't worry too much about steel demand. I think it's going to be strong over the next couple of years in China.
Right. You spoke about dollar. Do you expect that to ease given the fact that, we are nearing that rate hike cycle when it comes to Fed? We've seen Bank of Korea hold rates. We've seen RBI, the Indian Central Bank, hold rates. We've seen Australia itself hold rates. So given the fact that, the global rate hike cycle is nearing its end, where do you expect the dollar to head from here? Do you expect below 100 levels now?
Yeah, it's around about that 102 sort of handle at the moment for the US dollar index. It's a market that I look at. The first market I look at each day is that particular one before I go online and check to see as far as currencies and everything else, because it gives a true picture what's going on. Yeah, I won't be surprised to see a little bit further structural weakness. I'm not sure whether you'll see under 100 in the next, really quickly this month, but I think it's probably, that 101, 101.50 sort of number over the next couple of weeks. I won't be surprised if it hits that.
Right, I can't not ask you about crude.
Sure.
$85 or thereabouts right now on the Brent. Surprise output cut by OPEC plus. But, do you expect more output cuts going forward, given the fact that, we can expect some slowdown in demand since IMF has also red flagged global growth now?
Look, I was in Dubai on last Sunday week, and I didn't expect, and I don't think many analysts did expect much change as far as policy from OPEC plus. And it really hit the ball out of the park. So it was a massive hit. It was a 6. And I think really the fundamentals, if that's how they're prepared to roll, and obviously they control the crude supply, so if that's how they're ready to roll, then I won't be surprised to see further cuts. And maybe that's going to be evident probably in third quarter.
Right, if more cuts, then we can expect $100 anytime soon?
Well, unfortunately, you're going to see higher prices. The producers are really happy about this, and that flows into dollar, and that flows into, of course, the other side, which is inflation.
Sure. Let's also touch upon Bitcoin. I don't know whether you track that or not.
I sure do, since
that's
November.
Above $30,000 once again.
Yeah.
So, where do you expect that to head? Picking up from here? Will this rally pick up steam? 35,000, 40,000 anytime soon?
I go back to November and it was at 15,300 or something. So you're up nearly 100% since November. So let's not kid ourselves. This is a raging bull market. Has it got more upside? Yeah, don't get in the way of something like this. I'm not sure how much further it runs in this cycle, but hey, it's strong and there's plenty of demand, again, with young people and with alternatives, decentralised versus centralised. Yeah, I think that there's, again, good times ahead for certainly the crypto.
We've seen levels of 60,000 on crypto
anyway.
That's right.
So, it's a long way off 60, but it's a long way up from 15.
That's true. Peter, with that, I really appreciate you taking out time and joining us in the studios this morning. I hope the rest of the state turns out to be pretty, pleasant for you as well. I hope you enjoy the food here in Mumbai.
I certainly do. Thanks, Nandita.
Thanks a lot, Peter, for joining in. Well, with that, let's shift focus to market technicals then. Joining us now is Jay Thakkar of Sharekhan. Good morning, Jay. Good to have you on the show. Yesterday we crossed that 17,700 mark decisively, right? And SGX Nifty hinting at a positive to flat start this morning. Where do you expect the Nifty to head from here?
Hi, very good morning to you, Nandita. And yes, this expiry, April expiry has been really positive. Last day of the last financial year, 31st March is when we saw breakout coming in. And since then, the April series have seen really good move. We've seen that FIs were heavily short, also to the one of the highest levels. And on the flip side, if you on the converse, we can see that even the net FI long position was quite low. And we've seen that short covering happening from the FI side as well. 7.75 was the low, and they were long as far as 7.75% in the market. And now the percentage has jumped from that levels to 28%. So you can imagine that they have really started covering shorts. We've seen good long buildups happening in the markets as well. Now, in yesterday's trading session, if you check the data, the Bank Nifty has relatively outperformed and has really bounced back quite well after a negative close that happened on a Monday. So, we have seen aggressive put writing happening on the Bank Nifty. The PCR, in fact, jumped from almost 0.6, 0.65 to 1.3, almost a 100% jump on Bank Nifty PCR, that clearly indicates that the probability of now Bank Nifty holding 41,000 levels is quite high. It's just that it's once it takes off 41,500, it will reach towards the previous upper end of the range, that is 42,000 levels. And yes, as you said, Nifty above 17,700 is positive. We have a short-term target of 17,850, which is nearly around 50% retracement level of the entire fall from 18,900 to 16,800. The base Nandita on Nifty has shifted now from 17,000 after 17,200 and now it's 17,400. So 17,400 now seems to be near-term, short-term support on a base on Nifty, and Bank Nifty that's 40,500 to 41,000 back.
Well, those are the levels to watch out for on the Nifty as well as Bank Nifty. Let's also talk about the stock of the day, TCS, that will be reporting its fourth quarter earnings today. Now, revenues are expected to grow somewhere around 2% on a quarter-on-quarter basis. Net profit expected to grow 6.2%, that too on a quarter-on-quarter basis. Margins are likely to expand somewhere around 50 basis points on the back of easing supply side issues, right? If you look at the commentary that one would be watching out for is the comments on the BFSI vertical in light of, what has transpired in the US when it comes to regional banks, right? If you look at the IT stocks, they came under a fair bit of pressure in yesterday's session. Stocks were, in fact, investors were turning cautious ahead of, the numbers. So how would you play TCS ahead of the numbers, Jay? Would you look at more downside in today's session?
See, I would say that IT, to me, entirely seems to be, trading with a sideways to negative fashion still, so I would not. I mean, TCS, if at all, it has to really provide a reversal on the upside. Technically, it has to move above the levels of 3,500 now to really, start its up move positionally or for the medium term. Otherwise, short term, I think that 3,450 to 3,500 range on the upside is a clear resistance for TCS. In fact, if at all there is a bounce, definitely one should exit at high levels. But I'm not expecting a sharp fall as well as of now, because we've already seen IT stocks correcting quite well, and I mean they've not recovered as well as compared to maybe the other large cap names. We have seen some bull market happening or starting in few of the sectors. Okay, but then IT relatively is likely to underperform. So I would say that this result season for the IT may not surprise on the upside, but it will not even surprise on the downside, because most of the things seems to have discounted. It might just consolidate for another quarter or so.
Right. We had a query on TCS from Manju. I hope that answers your query. Let's also move on to the brokerage call of the day, and this one is coming in on Eicher Motors. Mcguire has downgraded the stock to neutral, and target has been slashed to 3,258 rupees a piece. In fact, it has also cut its FY24 and FY25 earnings estimates by 12% and 10% respectively on the back of lower volumes and lower margins as well. In light of slower earnings growth going forward, it believes that 10-year average of 28 times is actually at a discount to historical average, and that is warranted given slower earnings growth forward. The stock did see a good rally in yesterday's session. I think it was up somewhere around, nearly 3%. Do you think this call will slam the brakes on the kind of up move that we saw on the stock over the last 5 sessions or so?
Well, see, as far as the Nifty Auto Index is concerned, I mean, the one thing is very clear. I mean, we had this outlook shared in our organization as well. I mean, that the entire auto index, Nandita, is trading within a range of 13,500 to 11,800, 12,000. And, recently when it had reached to the levels of 11,800, 12,000, it was a screaming buy, or I would say it was a very good buy at those levels, because the risk was absolutely favorable. The reason is the consolidation in auto, which started in September 22. Since then, the auto index has been consolidating, as I said, within this range, and it has formed a good technical pattern as well, which is called an expanding triangular pattern. The index has reversed right from the lower end of the pattern, and then it's heading now towards the upper end of the range, which is 13,500. And right now, the auto index is at 12,742. Right, so still much more upside is left from here on. And now, which stocks are performing. So you see most of the stocks in auto index are performing. Maybe Tata Motors, M&M, or when you talk about the two-wheelers, like Bajaj Auto, TVS Motors. So see, there are few stocks which might just consolidate, will not perform as much as the others are performing relatively. If you see Maruti, it's not outperforming, right? You see other stocks, then they might not be outperforming, but then I don't see much of downside in the auto index itself as of now. So any downgrade of these things will be, I think, absorbed at the lower levels if at all there is a cut. I don't see Aisha falling much at these levels because the overall sector is trending higher. And in fact, anything, if at all there is, then should be utilized as a buying opportunity on Aisha as well, because I'm quite bullish on the auto index itself.
Right, a bullish view coming in on the auto pack. Let's also talk about IndusInd Bank. It has missed, MSCI inclusion by a whisker. The March quarter FII shareholding shows FPI headroom at 14.19%, which is lower than the requirement of 15%. Yesterday Kotak saw a handsome rally as the FPI room has increased to somewhere around 25%, and that, of course, brightens its prospects for an increase in weightage on the MSCI as well. So among these couple of private banks like IndusInd, Kotak and Axis, which one do you prefer? Now, we also had a query on Axis Bank coming in from Karthik Raja. He believes that this bank has been more volatile than other banks, and he has two lots at 870 rupees per lot. He wants to know if this is the right time to average. So what would your advice be to some of these people who are looking at private banks now?
See, Nifty private bank, Nandita, I would say that yes, is looking quite good. The entire Nifty private bank index. In fact, it has provided a breakout from a downtrend line resistance, and now in the near term, the index seems to be having a good support at the levels of 20,500, 20,600 range, and the index is somewhere around 20,962. And in the short term, I'm expecting this index to bounce back to the levels of 21,300 approximately. So there is another 1.5% move is what I'm expecting, and that the private sector banks are likely to perform because, as I said, the Bank Nifty is likely to move towards 40,000, and in that the participation of private banks will definitely be there, as that would be leading the Bank Nifty right going forward. The stocks like Kotak Bank, ICICI banks are looking good to me as of now from an immediate point of view. But then Axis too. The chart structure of the data of Axis is not as that great of Kotak after yesterday's move, maybe ICICI. Since a couple of days, the stock has really provided a nice breakout of the upside. But then Axis Bank, has maintained its support levels of 830. Until those levels are held, I would say that this stock may bounce back to the levels of 880 in the spot. So if you talk about the futures, then it may just bounce back to 880, 85. Around those levels, I think one can definitely exit. So if someone wants to average it out here, one can for sure, placing a stop loss below 840 and target 880 in the near term.
Right. Let's also take up a query on Sula. Rahul Shinde has a query on this stock. Now, it did come out with its Q4 update, and, its own brand sales volume has crossed 1 million cases, and, elite and premium wines have surged past 5 lakh case mark for the first time. It has reported like a strong 15% growth on a YY basis. For the entire fourth quarter, and wine tourism has also seen a strong 18% growth in the fourth quarter. Given the fact that over the last 5 days it has been in a steady downtrend, down around 3% or so, what would you advise some of these investors to do when it comes to Sula?
I mean, Q4 generally is absolutely, most of the time, Q3, Q4s are good for companies like Sula, and I mean. That is where they have this kind of wine tourism and a lot of sales happening as well. I mean, going forward another 2 quarters, I would say Q2 and Q3 will definitely be challenging fundamentally. But then overall, the long-term prospects looks positive for Sula definitely. I think the Q4 performance seems to be priced in. And technically, hence, we are not seeing enough move. So we have seen a breakdown coming in yesterday's trading session. I mean, in the near term, I think that 380, 385 range of Sula seems to be a clear resistance, and it would trigger buy in the near term only about those levels. Although I have very limited data available technically because we saw stock listing few months back only in December. But then with whatever available data we have, I think technically about 380, 85 is where Sula might just gain momentum on the upside until those levels aren't taken off. The overall trend is sideways to negative.
Right. Since we are talking about the recent listings, I want to also talk about delivery because we saw block deal yesterday, and Tiger Global seems to have offloaded another 1.6% stake in the company at somewhere around 330 rupees a share. With the limited data that you may have on this stock, would you expect this to now head lower from here? Because it has come off quite a bit from the 700 odd levels that we had seen recently.
Yes, absolutely. I mean, from May highs of 708, the stock has fallen to 291. I mean, that is the lows which we saw coming in Jan this year. From since then, I mean, the stock has bounced back. I mean, we haven't seen a sharp recovery in the stock, but then it managed to bounce back. It managed to hold on to its lows of 290, 91. And now it seems to be consolidating and forming a rounding bottom pattern. And why am I saying rounding bottom pattern? Because we've seen a 5-year declining structure coming from May to Jan. And the momentum indicators, the short-term, medium-term momentum indicators have shown a positive divergence, and prices are holding up quite well to its recent lows. That really indicates that there is a possibility of one more lag on the upside, at least of this recovery, if not entirely. So, and by entirely, I would say that if the stock seems to, whether it has bottomed out for a long term or not, and that may not be confirmed immediately, but at least for the short to medium term, I think that yes, till the levels of 300 are held on this stock, there is a really high probability of it bouncing back to the levels of 375 to 400.
Right, so those are the levels to watch out for on delivery. Let's take up a query on Voltas and Vector Foods. Satya CK has written in and he wants to know your thoughts on these two counters. On the charts, Jay, how would you see both these counters?
I mean, Vector has seen an amazing rally since the middle of last year. I mean, you see the lows of 250 approximately, and the stock has doubled from this, right? So Vector definitely has seen a very good rally. It seems to have started definitely a fresh move. It's in a bull market, definitely. Vector Foods, and I would say that one can definitely stick to this stock. If someone wants to actually initiate fresh long on this, then one can initiate as well. It's just that the overall medium-term support now comes to around the levels of 500. But the overall outlook for Vector is positive. In the short term, it might consolidate, but for the medium to long term, the stock definitely seems to be in an uptrend. Hence, it's in a bullish zone. So Vector Food, I suggest that one can definitely buy on dips and accumulate for the long term. But as far as Voltas is concerned, in the near term, the stock is seeing short build-up from the derivatives point of view. And it had seen a move, but it was a corrective move, a bounce back which we have seen was a corrective one. And that has been, that range or that bounce back seems to have reversed now again after yesterday's move. And we've also seen short build-up happening there. So I think Voltas on the upside, 830 seems to be a clear resistance going forward in the near term. And the stock is likely to fall until the levels of 785, 790.
Right. Next query is coming in from Dhananjay, and he wants to know your thoughts on Aarti Industries and Polyplex. If you look at Aarti Industries, it has lost somewhere around 11% on a YTD basis, and it's just coming off its 52-week lows now. So, with a short-term view on these stocks, what would you advise him to do?
See, we have seen 7 consecutive negative close coming on Aarti Industries, Nandita. And after this kind of fall, I mean, definitely, the stock might take some pause because we have seen some also readings on the momentum indicators. In fact, we look at the weekly charts of Aarti Industries, it seems to be forming a double bottom in the weekly momentum indicators, and the monthly indicators have reversed as well. It has also formed a piercing candlestick pattern on the weekly charts, suggesting or indicating that the recent lows which were made of around 480 may stay back for some while, at least, till we don't see complete retracement of the previous fall, or maybe a retracement of the previous 7 months decline. And it has very high probability of bouncing back to the levels of 600 to 620. And if you see the retracement of the entire fall, which we have seen from 925 till the level of 480. So it was a sharp decline. The stock almost became half from those levels, and now we are seeing good retracement. So any dip in RB should definitely be used as a buying opportunity.
Right, I quickly will get in one more query because we're running out of time. Naveen has written in and he wants to know your thoughts on Elecon Engineering. Now, this stock was up nearly, almost 9% in yesterday's trading session. What would you advise investors to do on this one now?
Absolutely. It has provided a very nice record. In fact, this stock too, Nandita, has been in a clear uptrend. And with this kind of a move in yesterday's trading session, it has again provided a breakout. I would say now from a big consolidation that has happened on this stock. I mean, the consolidation happened from the levels of 475 until 325. So that's almost 150 points range breakout that has come on Elecon. And from there on, positionally, if you see, then the stock is heading towards the levels of 600. On the lower side now, the support seems to be around the levels of 395. So with that as a stop loss position, one can be buying Elecon for a target of 550, 600 going forward.
Right. Jay, we're running out of time. So if you could share some stock recommendations for our viewer this morning.
Definitely. As I said, that I'm bullish on the auto pack, and we've seen a huge consolidation breakout coming in. Bajaj Auto and TVS Motors. So Bajaj Auto, one can buy, it closed around the levels of 41.77 in yesterday's trading session. So one can buy this targeting 43.20 to 44.10. And one can maintain a stop loss at 4090. And the second buy is again from the two-wheeler pack from the auto space. And that is on TVS Motors. On a monthly chart, the stock has been in an uptrend. It just consolidated for a couple of months, and now the breakout has come. So one can target 1170 to 1200 levels going forward in the short term, and one can place the stop loss at 1103.
Well, those are the stock recommendations coming in from Jay this morning. Well, with that, Jay, thanks a lot for taking out time and joining us and addressing all of your queries on the show. But, with that, we're completely timed out on this edition of Morning Trade. But don't forget to join in for the live coverage of TCS Q4 earnings this evening on Moneycontrol. With that, it's a wrap from me, Nandita. But coming up next is Opening Bell, so don't go anywhere.